Hey, I've got something huge for you today. We've officially crossed $10,000 in annual dividend income. That's right, over $10,000 coming in whether I'm welding, sleeping, or reading Buffett and Munger Unscripted by Alex Morris, who we may just be talking to in the near future, and the link for that book is below. Now, before we jump into the portfolio update, I want to remind everybody that I am just a welder with no financial background whatsoever, but am currently 85% of the way, as of this recording, to being a net worth millionaire. So yeah, I've made plenty of mistakes and will continue to make mistakes, but as they say, there's no such thing as failure as long as a lesson is learned from it, and I'm sharing my real portfolio with you, mistakes and all, because I believe in being transparent and what's working for me. So here's the April 2025 portfolio activity, what we bought and sold, and dividends received and increases. Now we'll start at the bottom with what we sold was Visa. 4 shares, trimmed it out of the Roth. Now we were up on 39 shares, a little over 21% on those. So we want to increase our allocation to funds a little bit quicker, which is what we did. So yeah, we trimmed a few shares, still love Visa. And if it goes below $300, I do intend to buy quite a bit more when it's down there. So we lost $9.44 of projected annual dividend income. And the average price we sold those at was $324. And that was toward the beginning of April, right after we were liberated from a lot of our stock gains. And then what we bought, 2 shares of Starbucks, ticker SBUX, at $77.98. Now, this was before they dropped from their earnings report, which wasn't as rosy. And yeah, they got a little bit of stink going on with them right now. There's a little bit of a glitch, but people bought it right back up. I got excited. They dropped below our cost basis of $76 and change, but it didn't hang out there long enough. And as of this recording, it's up over $80 a share. But I think it's going to take some time. Brian Nickel came over from Chipotle. Remember, he helped turn Chipotle around. He helped turn Taco Bell around with their Doritos Locos Tacos. That was all Brian Nickel. So he's really not had enough time to implement and get his fingerprints all over Starbucks. So trying to do it with the back to Starbucks, and they're investing more into the people, into their labor force as making Starbucks a better company instead of trying to just go with the machines and eliminating more people, which was kind of, I think, what Laxman Narasimhan had wanted to do, the previous CEO. And yeah, that the reinvention of Starbucks didn't go quite that well, and it kind of cost him a job. So either way, I think Starbucks is going to be fine. It's going to take some time. We're going to give Brian Nickel a few years to see if the magic man can strike thrice. We also bought 5 shares of the Vanguard Total Stock Market ETF, ticker VTI. So I prefer VTI over the S&P 500, which is SPY, but I also, as you'll see, have allocation to that. And that simply is because VTI gives you the total stock market. Now, it's not everything total. There's a lot of penny stocks, a lot of pink sheet over-the-counter stuff that's not in there, but it's almost 4,000 publicly traded United States companies, and I just think that's a little bit, I like it more, okay? I like the exposure to those small and mid-cap companies that the S&P 500 doesn't quite give you. So $258.71, that gave us $18.75 of patty. We bought 31 shares in the Roth of SCHD, so a big chunk of that Visa sale went toward VTI and SCHD. $25.66 on average, and that gave us $32.24 of patty. 2 more shares of a company that frustration is kind of the word I'm feeling with it, as it's completely chopped sideways. And this may be one of my biggest learning lessons of all. We're currently in deep at 123 shares, averaged $157.95. So we're down not even 10% yet, but I think I have a good understanding of this business. I believe in the management, but hey, like Warren Buffett once said, that if the jockey is outstanding, but the horse kind of sucks, there's only so much the jockey can do. And this is nothing on Nexstar, the company. It's macroeconomic, meaning that the industry they're in is changing and shifting. And there was actually a short report put out by Grizzly Reports, and I read through it. There's a link for it below if you want to do so. I think it was kind of not very well put together. A lot of errors, some mistakes, misspellings. I believe they're foreign. I don't think they're, so we'll cut them a little bit of slack. But they really focused in on the digital aspect of the business. And quite honestly, as the 2023 annual report, which is the last one we have, and the last I could find information on shows, digital was about 8% of Nextstar's revenue. So it's really an ancillary business. And I don't think if that completely went away, it would be catastrophic for the company. So Nextstar Media Group is one that I'm really thinking over, and it's been pinging between the mid 140s and the mid 180s. And there's been 3 trips there that I could have taken profit at 180 and then bought back in the 140s or 150s. But I think next time, hoping that it does get to the 180s, I may scale back to just 100 shares because, hey, not as smart as sometimes I think I am. And this could be a lesson, but I do like the company. They grow the dividend very quick. They are free cash flow machines, and they have a super high free cash flow yield currently of over 20%. But that gave us $14.88 of patty. This one is a bit of a trade. Ticker SOXL, Soxel, is a leveraged bet on the semiconductor companies, and it moves quick. It moves 3 times as fast as that index. So this is kind of a trade. Usually when it gets this low, under $10, it will bounce back. So this does pay a dividend, but I do not intend to hold it for many months. I would love to see it get somewhere back into the mid-teens. And as of this recording, it's around almost $12.50. So we bought those 10 shares at $9.50. And if we were to hold a whole year, that would give us a patty of $3.50. Then I bought one more share of the Global X Energy and Infrastructure ETF, ticker MLPX. This ETF is focused on midstream companies. The quickest and shortest way I can think of saying it is there's 3 different ways that they handle oil into different streams. You have the upstream. They're looking for it. They're finding it. They're pulling it out of the ground. Then there's the midstream, which is storing the crude oil, transporting it, using pipelines and infrastructure like Enterprise Products Partners, ticker EPD, which is a solid and fantastic company, Energy Transfer, ET, and Williams Companies, ticker WMB. But the thing is, they are master limited partnerships, and you will receive a K1, which is a whole different ball of wax. But the MLPX ETF is a way to give you exposure to all the midstream companies and not have to deal with the K1. So because the dividends are not qualified, I'm holding it in a retirement account, the self-directed IRA. And there's about 30 some companies, and I think it has a 0.35% expense ratio for the pleasure of not having to receive a K1. We bought that share at $56.65, and that gave us $2.76 of patty. And then the last one here is Harrow Incorporated, ticker HROW. They don't pay a dividend. They're an ophthalmologic company. They deal with the eye pharmaceutical industry, and they are growing. Big fan of Mark Baum, the CEO. But this one is a long-term hold. I'm ready to coffee can it. I'm trying to get to 200 shares. We're currently at 198. And this is one that, again, coffee can, meaning that I'm just going to hold it and not do anything else. I am going to wait and see unless something critical or catastrophic happens with this company. I'm going to sit through the highs and the lows for a good 5+ years just to see what happens. So in April, that gave us $77.01 of projected annual dividend income from those purchases. Remember, we lost $9.44 from Visa, which gave us an April net patty of $67.51. And now for the dividends received, we have 3 monthly payers. Realty Income, ticker O, hit us with $60.41. Agree Realty, ticker ADC, $25.81 in dividends. And remember, these dividends are not qualified. We hold them in the self-directed IRA as well, so we don't have to deal with any taxes on those as of yet. And then Main Street Capital, ticker MAIN, $37.50. You know, I look at these hands and I see lots of scars on them. I was talking to my guy, Ryan Williams, and I think one of my issues is that I am really attracted to these falling knives. these descending angels, whatever you want to call them, stocks that are notable and well known that are falling. And I try to get in on them. And sometimes I'm worrying that I might be tricking myself into believing that they are a easy recovery and turnaround play. But Nike, we've been buying them. We have 105 shares. Looked into the business, and I am a fan of Elliott Hill, their new CEO. So you guys have heard my spiel on that before, but Nike paid us $36.40, and we're down about 25% on that position. And then the biggest payer in the month of April, Vici Properties, ticker VICI. If you don't know them, just think Las Vegas. They're predominantly known for owning most of the big name real estate on the Las Vegas Strip. So God bless Vici Properties. I have been holding them, going to hold them for quite some time because I think Vegas is a one-of-one city. I don't know of any other city that's comparable to Las Vegas anywhere in the world. So having prime real estate in a one-of-one city, I think, is just going to be fantastic for many years to come. And that was $298.52 of total dividends received in April, which was cash in our pockets that we didn't have to work for. We didn't have to do anything else to receive those dividends. But still kind of sucks that Nike's down so far. But hey, they're paying me dividends, right? And then we had one dividend increase in the month of April. Was Agree Realty raised that dividend 1.2% for a grand total increase of $3.68 of extra patty gained in the month of April. Now, we're not going to spend a lot of time on this one. This is to show our current allocation of funds and individual stocks. This takes into account mine and my wife's portfolios, all of our stock investments. This is not any real estate or 529s, savings accounts, high yield savings accounts, anything like that. So this is just our investment portfolio. And at the top, that's my 401k. We have 3 holdings, and this is ranked in order of most dollar amount to least. So DFUSX is at the top. That is the DFA US large cap company fund. It is the S&P 500. So it tracks the S&P 500 index. Next up is VVIAX, which is the Vanguard Value Index Fund. And that fund invests in large US companies that grow more slowly than the broader market and may be considered undervalued. And then we have FSMDX, which is the Fidelity Midcap Index Fund, and that tracks midcap companies, medium-sized US companies, and it's supposed to balance stability with growth potential. So we have those 3 at the top. And then the next biggest position is our individual stock. It's Nexstar Media Group. So still not quite 5% of my net worth, but I'm thinking about, once it rides up, maybe scaling it back. And then rounding out the next biggest ones, we have SCHD, Realty Income, VTI, which we're really trying to grow that, and still Visa, even after trimming it back. So we're currently at 24.9 individual stock and 75.1 fund exposure. So you can kind of see a little bit of the method to the madness. We're trying to boost that fund exposure from our investment portfolio combined to 85% and get those individuals. So it'll get there eventually over time, and you may see me do a few more moves. You know, if I were to scale back Nexstar to 100 shares, I likely would put that into a fund. But hey, we'll see what happens, and if you stay tuned to the channel, you'll get to find that out too. And then here is the projected annual dividend income breakdown, numbers and all. DFUSX, right? That was at the top, giving us $2,365 of dividend income a year. VVIAX hitting us with $2,190. And then interestingly, Nexstar Media, $915 of annual dividend income. So yes, we may be down, but I guess that's one of the beautiful things about investing in dividend growth companies is that they grow the dividend and you get paid to wait. And I'm really trying to think about Nexstar as owning a business and not receiving validation from the stock market. Because think about it, if we were to buy a business like Nexstar or like Nike and they weren't publicly traded, how would you know if the business was doing good if there wasn't a stock price for you to look at every minute of every day that there was a market open. You wouldn't. So with the private business, you look at the fundamentals, at the cash flows, at the future, things coming down the pike. So I'm trying to get my brain into that mode of thinking like owning a business and not focusing so much on the stock price, because one thing I have noticed is when the earnings increase and the profitability increases, the stock price will eventually follow it. Why? Because Ben Graham says that in the short term, the stock market is a voting machine, but in the long run, it's a weighing machine. And as we come down, you see $10,625 of projected annual dividend income until I add to that, help grow that number, and automatically when my 401k money goes in every month, I don't have to think about it. And you know what? One of the cheat codes to building wealth is to automate your saving and investing where you don't have to think about it. My wife's Roth IRA, we buy $50 of VTI every single Friday, and there are so many times that I'll hear a ping on the phone, bing, $50 of VTI bought. I completely forget about it, and then I don't have to think about it. So automating your saving and investing is the cheat code to really building substantial wealth. But if you're just starting out, you have to start somewhere. You will never get to $100,000 of passive income or $10,625 of passive income without that first dividend dollar sent your way by some company or ETF. Don't forget to go to dapperdividends.com and sign up for my free and fantabulous weekly newsletter where I share an investing thought, the portfolio activity, dividends received, and some stocks about to go ex-dividend. And as always, if you'd like to save a bunch of money on a Seeking Alpha annual subscription, there is an affiliate link below. Now these videos get edited down. I gotta make them quick and snappy and punchy. So if you want to hang out and see me more unscripted, kind of like Buffett and Munger. Hey, if I can insert my name in with theirs. Every Sunday night, I'm in the Dividend Dive, hopefully with you. We'll look up stocks. We'll kind of talk news, whatever's on our minds. It's our time to hang out together. Now in this floating little box next to my head, I ran a really interesting experiment where I invested $10,000 into each of the top S&P 500 companies for a few years to see if they would beat the index. And I had some really interesting results. So if you want to see what that interesting result was, click that floating little box and I'll tell you all about it there.